Well, welcome. Well, today is the 18th of March. So I just finished off some trades. Very big trade for me was the yen pairs. One of my neighbor actually knew I was heavily into the yen pairs. I've been looking to get in on the yen pairs for quite a while. So at the time I told him I was looking at the dollar yen as well as the euro yen. So I'll just show you what I was looking at. All right. So let's go look at the dollar yen first. Dollar yen shot up really, really nice. Looking for this peak, for this top to break, really. The reason for this move is actually, it's really because of this. It's because of this, right? So this is your first, this is your second, this is your third here. And of course, here you have a first, a second, as well as some kind of third wave as well. And then within this third wave, as it goes up, there are many opportunities for entries here. All these structures that go up. This is a stop hunt below here. Here. So around here, also trying to enter here at this point, but it was quite tricky. I was able to enter, but I was actually stopped out around here. I mean, I took some profit here. I had an entry here, but this one actually came back here, and then I took some, but it came back, so I was stopped out there. It went below here, and when this one started to go up, I was not in the dollar yen anymore, but I was fortunate because I jumped in on the euro yen instead. So on the euro yen would have been this. It was really nice, almost about 500 over pips. About 500 over pips. Yeah, here. So it was about 600 pip move. All right. So very significant. I mean, where can you make 600 pips as a scalper or someone that is intraday trading up and down? So if you just buy and hold, I think you can outperform. You can outperform almost the best software. I don't know, the best algos out there. Okay, so let's look at this. The idea is not to trade so much. You're just looking to enter. You're just looking at very important areas like this. The important areas, right? And then you're looking for a structure like this. And you also notice you have that. So what you're playing is the possibility of actually this wave, 1, a 2, and a 3. And of course, this is a possible 1, a 2, and a 3. So you're looking to play this wave to the upside. So dollar yen was gonna go up. And since I was stopped out of dollar yen, euro yen looked like a very good opportunity as well. So pick one of them: dollar yen, cat yen, Aussie yen, euro yen. I picked the dollar yen. If this pulls back, I'll look to buy again. And this was a huge move. Made a lot of money on this. I made a lot of money on this. Okay. So it's not over yet, because if you're looking to trade this, look for a pullback. Look for a pullback. You can put on your moving averages. I'm not here to tell people how to actually trade, but at least the bias is still something like this, So find some reason to give you a good risk reward and try to buy this to the upside. This is what I was looking for. Okay, this was euro yen. So also one thing I wanted to mention was also the FOMC. When you look at the FOMC Fed funds rate, so they decided to increase. Well, because they wanted to fight inflation, get people to stop spending money, stop buying a new house, maybe keep the money in the bank. But the interesting thing about this is, I've always emphasized on, is don't care, do not be so perplexed about these numbers. Yes, the dollar strength is supposed to increase, but hey, if that's what a trader has on his mind, this is where a lot of them got killed. This was, as you can see here, 16th, 17th March. So the Aussie dollar, although the dollar was supposed to strengthen, But look what happened. Wow. So those who are trying to sell, trying to sell, trying to sell. Well, here is where it might turn, it might, but those who are trying to sell like this candle or try to sell here, try to sell here, they're all under pressure now because this top has been taken out. Not to say that this is going to go, it could, but it's 50-50 because now the down and up are both equally possible. I will hope that it comes down, but I know that's just a hope for now. Okay, what will make this in line with the fundamentals, which is dollar strength, would be some kind of price action that says down. What would that be? Well, you have to look for something like this. Just look for something like this. Look for this breaks like this. You see that? See how this one goes 1, 2, 3? Yeah. Oh, sorry, this is not right. This is B1. This is what you hope for. And you hope that this one comes down as well. It's what you're looking for. All right. Now also be cunning like a fox because this can come down a bit and shoot up again, breaking this top. And then this one is the one that collapsed. These moves are technical moves that are designed to knock people out of the market, especially those who are in the sales trying to go in line with the fundamentals. Right? As a forex trader, you need to be really at the top of your technical game. Okay, and realize that people, hungry sharks out there, are trying to knock you out of your sales, so that when you're forced to buy back your position, they will then sell into your stop losses so that they can sell high and then they can buy low here. BUY. Sharks will sell here and buy here. So these are the technicals. You got to be very aware. But what if this doesn't break the top and it starts to exhibit weakness? Well, then you can sell it to the downside again. The thing is that you wouldn't know when it's going to start until it starts. So try not to put something like a Fibonacci, and then this is what you must not do. Don't sell here, don't sell here, don't sell at 717, don't sell at 786, don't sell at 886. Don't sell any of these levels because this can just go right to the top and just break the high. And trust me, if this does not come down, there is an upside possibility on this as well. 1, 2, 3. This is a big correction. This can go up, close above here, pull back, and then just continue going. And if you play without a stop loss, the count will be in huge drawdown. Okay. So be very careful. Just because the Fed has raised the interest rates doesn't mean that the Aussie dollar cannot keep going to the upside. What I hope actually is something like some key technical levels would be like something like this over here. Okay, this is a key level. What we want is really for this key level to hold. Right? You really want this key level to hold. Now, if it goes up just a little bit and the candle does not close above this key level, then that would be the best, because any close above here becomes quite tricky. All right, because then 0.80 will be up for grabs, you see. But so long as it goes up and comes back down here, then you draw your nice trend line this way. Price comes here, corrects, and then it comes out here. It plays below the trend line. That means this one then now has that possibility to come back down. The probability increases greatly. So this is what you want to see. And then of course that's the best, because we're now playing in line with the fundamentals, right? Which is the Fed increasing the interest rate for the US dollar. It's what we want. So take note of this. And I'm going to share with you one last one that I'm looking at, which is the pound cat. Pound cat's very interesting. But pound cat's very interesting because pound cat has got this structure right here. It has got this structure. Oh man. So it has this potential look, this potential look. I'm looking at this very carefully, which means this is a 1, this is a 2, this is a 3. Now, I would like to buy the pound cap. I would very much like to buy this, but what would make a good buy is for this low to be broken. If this low is not taken out, it leaves this option open. One slow correction and then one more drop to catch out people who are the early buys. And since I want to buy, I have to be very wary of this, very leery of this. What do I mean? I mean, stuff like this. You see, as this goes up, what happens is, did this continue? No, it just catches people one more time. So these are the important technicals that you must understand. Hungry sharks are looking to swap your orders out with their own. Therefore, this low is very important. What you want to take very close attention to is put a level here, put an alert right here, right? And you just create an alert like this. You want price to come touch this, you want your alert to sound. You will see any reversal patterns here, buy it, right? Don't just buy it because I said so. Look for price action that says that it is turning, okay? Whatever way that you know how. I'm just telling you the bias, there is a good upside on this, and the reversal pattern will confirm this move back up to confirm this move back up to anywhere here, 1.7. So that's about 500 pips. You know, you just catch about a couple of these, 7 to 10 of these a year. It's a lot of money, my friend, right? So let's hope, let's pray that it comes, touches low, and then it doesn't close below, but it wakes up like this. You see this wick, it comes below and chum goes up to complete this pattern, and then it goes back up. That would be the best. That would be perfect. Okay. What you don't want is you see this, you don't want this to come here, go below, and then keep crashing. Right. So don't just buy it like this. All right, don't be too aggressive. Just wait for this to wick. When it does a wick, there's probably bullish price action right within the wick itself on the lower time frame. That is when you take the buy. Because you don't wait for that price action, then this is what will happen. And then when you buy it here, what will happen? You'll be in huge, crazy drawdown. If for those who actually trade without a stop loss, you know, it's a very bad idea. Unless, of course, the lot size is extremely small, so you can maybe trade out stop loss. But always wait for price action, all right, to happen at very important levels such as this. So covered the Aussie dollar, pound cap, things I'm looking at. Of course, I go on to do one last one, maybe like Dogecoin. No, not Dogecoin. I'll do oil. Sorry, I'll do gold. Okay. So although there was the war going on in Ukraine at the moment, right? But when the war was going on, you can see price went up to this peak over here, all the way up to 200. And I said in my past videos, if you check them, that there was no point that I ever suggest a sell, right? No, I think people have been looking at maybe these levels, 1900, you know, they are looking at these levels, at all the resistance. But what happened? It didn't work because it was coming up to 2060, about there. And so was oil. So all this was already, the probability of this getting there was very high. Okay. Now, once these technical levels have been hit, people are now taking profit. All right. So even though the war is still going on as I'm making this video, why is price not continuing to the upside? If this came up because of the war in Ukraine, but look, even though the war is still raging, even though there are a lot of refugees right now, unfortunately, but so there's now, of course, people might be thinking of some other fundamentals, but it's not really important. You know, the important thing is that the technical level has been hit. People are taking profit. It's really that simple. I wish I could make it sound sexier, but that's really it. That is really it. People are taking profit. Now, where can go get to? Well, if you look back to your left, right, um, price when it was at this level came all the way back down to around here, around 1867. 167. Price right now is really in the middle of it's really in the middle of nowhere. So, and this is just one really strong with the downside. This is not somewhere where you can actually trade unless you are looking at trading the much lower time frames. So instead of picking a turn right here, you're actually trying to trade somewhere here. All right, trying to get from here maybe to this level. But the stop losses must be in place because price can always do something really weird and come up to liquidity levels like that. These are all levels of liquidity right here. You can always try to knock people out before it comes back down again. All right. So if somebody wants to trade here, then stop losses must be in place. All right. Or just don't trade. Just stay out of the trade altogether. All right. Let me see how we could actually enter this. Yeah. So let's say if somebody wants to enter this, I'm not going to sell this. I'm not going to sell gold because if I'm going to sell this, I would want a bigger or more meat on the stick. All right. Because if I was to sell this and this price actually came here, there, and then it came here, well, then I have to sell it to there, to close some of my positions and see the rest can get to there. Right. Because now you're playing something like 1, 2, 3, 4, 5. And for me, I generally don't play these kind of waves that are coming to an end. If I were to play this, if I had played this, I would have tried to play somewhere closer towards the top here. That is where I would have tried to play it. Something like if I had seen this and I wanted to risk it, green, this candle, a risk like that, right? Over here, possible. Somewhere near a monthly level, high, you see. But now, price has actually come down that much. And if we were to sell this, we think that this is where it can come to. You're playing really the last bit, all right? But if as a trader, let's say, just for discussion's sake, how would we actually enter the sell? Thinking that price can get from here to this level, that would be this here would be a setup. This here would be a setup because it gives you your stop loss. All right. So what's the opposite side? Well, the opposite side could be that because this is an existing uptrend as well. This is an existing uptrend. And this one can also do like this, do this. All right. This one might come down like this, but not get there. Makes a double bottom here. And then from here, this becomes a B here, and a C. And then this goes all the way up. So meaning that if we try to sell here to this low, that's the trade idea. But what if it doesn't work? It means that this could play out, you see. And if you play the sell without a stop loss, this is what is going to happen. This is what's going to happen to the account. All right, a huge loss. So I guess what I'm trying to say here is that whenever we take a trade, always know where you intend to lose a trade, because that will also allow us to keep our lot size manageable. All right, unless it's something. If I ever see something that I think you can actually risk half your account on, I will let you know. But this is not one of them. All right. So if I was to trade this, it's right now in the middle of nowhere. So if you're looking to trade this, it should come here, go up, and then break down to downside. And then what you're hoping is that this one is just coming to the lows over here. But this is effectively counter trend, which is tricky. That's why I'm not actually trading gold at the moment. All right. I'm not trading this at the moment. What I would like, actually, I think it would be best if gold could actually come here. Now we said it could get it, but it doesn't get there, and instead it comes back up to somewhere this top here. Then if this one pull a trend line this way, let's say this one exhibited weakness, and then it dropped. You see this kind of structures like that? And then it came here, then from here you can sell it down. You see, this is a good trade. This is a good trade. This would be a good trade to sell, but this will take a couple of weeks to set up, right? So that's what I'm looking at for gold. Oil, oil. We always said oil was going to go to the upside and hit 126. Actually, I was wrong. It hit 133. Let me see. What did I do anything? So 2 days daily. Monthly. Okay. So it was supposed to get to 126, which it did, which was actually this level over here. I'll just show you this level over here. 127. Spring down just a little, 126.443. So it got up to 134. And then this is profit taking over there. Nothing much you can do. This is just one move up, one move down. It's profit taking. So if this is going to make a turn back down, well, it's going to take time. How much time? This amount of time. And that amount of time, let's see how many days that is. 1,200. It's almost small. It's almost 3 years. Yeah. So if you want to just stay out of oil, just stay out of oil. It's over. It's over. All right. The money was already made. Yeah. This was a beautiful move up. So just close the oil charts. There's nothing else to do. Oh, fun. Just look at the ruble. Ooh. I hope things get better between Ukraine and Russia as soon as possible. It's very unfortunate. Very unfortunate. Yeah. I think that's about it. Okay, so as a quick recap, pound cat, see what happens here. This is an important level. This is an important level right here. Okay. Is this 2 weeks? Yeah, important level, key level. All right. Euro yen. Yeah. So euro yen. Go to the dollar. So what you hope for is some kind of pullback. But you're looking to see if you can get to this high over here, to break this high at least. So we don't want this to go straight up. We want this to pull back, then buy. Okay. And dollar yen broke the high. Perfect. It has a target up here, 121. So if dollar yen pulls back, you know what we say, if it's in a third wave, best stay in it. All right. So wait for it to come back to area of value. How do we do that? So let's say we do it like this. Area of value, well, anywhere here in this region, or area of value when it pulls back here. Area of value, buy. For now, it's a third wave. Try to stay with it. All right, it's important. Don't go against the trend. And that's it. So look out for these big epic trades, 400-500 pips in the making. All right, take care and good fortune. everyone. Bye bye.